Have you ever wondered what would happen if commodity prices come down after having a long history of inflation? Well, you should. This creates lower returns and unattractive bonds, which is the central bank's worst nightmare. Cathie Wood, aka Aunt Cathie, is the CEO and CIO of Arkk Invest, where she runs the highest returning stock ETFs of the last 3 years. Some even say that she's the Michael Jordan of ETFs. In her earlier years, it seemed like everyone was doubting Cathie Wood. There's a quote, "You are rewarded in public what you practice in private." Little did everyone know, Cathie was refining her craft, intaking all the knowledge she could find on investing, and made the Tesla call that put her on the map. Aunt Cathie takes a different approach from her peers. She believes that in the long run, the economy will not only experience a momentarily induced curb on investment and spending, but a long-term one. So what does this mean? People buy less stuff, which basically affects the whole market. Then companies drop the majority of their expenditures. And as a result, investors begin to sell and the prices in the panicking market take a dive off a cliff. Spending less money does sound great, but just imagine for a second what will happen to the entire market if everybody just spends a lot less money. That would be no bueno for the market. As you've probably noticed, prices have gone up. McChickens at McDonald's aren't $1 anymore, Subway footlongs aren't $5, and gas has skyrocketed. Here's the thing, the economy experiencing inflation actually feeds the hunger of every passive income earner as they safe keep investments with promising returns. But seriously, the spike in prices comes from the increased money supply, creating more private consumption, and you guessed it, the declining of the dollar. That's why a lot of people are investing in cryptocurrencies. It's decentralized, and we're actually very bullish on crypto, and we've covered that in a few of our videos. We're not financial advisors, so we strongly urge you to do your own research. Currently, Jerome Powell, aka J. Powell, who happens to be the chair of the Federal Reserve, explains that temporary higher inflation is expected within the short term. So wait, does this mean it's no big deal? The Consumer Price Index is expected to move from 3 to 4%. An increase in CPI means that a household has to spend more money to maintain the same standard of living. This can in turn be good for businesses and the government, but not too good for households. But Aunt Cathie, being a world-renowned financial juggernaut and a long-term modern economist, would you rather prefer to go with the trend or challenge what your gut tells you? A threat to the investors is about to unfold, or at least for those investing in the bond market. Here's where Cathie Wood thinks it's coming from. First up, the good deflation. Well, as you see, innovations have been up and coming since then. Take a look at the electric vehicles, which have been lurking around to displace automobiles in the market. If the price of oil continues to step up, people would just choose to have something to pay for bills and drive around with their EVs. And with that, the automobile industry would have to lower down their prices to find their buyers. Aunt Cathie thinks deflation is also coming from the development in the healthcare sector, specifically in genome sequencing studies, and other industries like battery pack systems, artificial intelligence, and 3D printing. But it was expected, wasn't it? From time to time, we have been seeing lots and lots of technological advances, and there's no doubt it would crush demands for the previous ones we got used to consuming. If you're new in the financial space, well, you better watch out how innovation-driven companies perform for better or for worse.
Not all deflation is bad. There's really good deflation associated with these technologically enabled platforms. They follow learning curves, which are characterized by declining costs and prices, and enables more and more sectors to have access to these powerful new technologies.
But that was the deflationary boom, she said. If we've provided you any value, please hit that like and subscribe button. It means a lot. Well, why does Aunt Cathie think this? Basically, all the short-term oriented shareholders will surely put enormous impact on different firms out there. And actually, those firms must have taken the threat of technology now, since they're starting to spark more earnings on innovations through buybacks. To put things lighter, Cathie cites two flourishing sectors in this global crisis, namely the energy systems growing up to 40% year to date and the financial services growing to 27%. But newsflash, while they're shining a little brighter at the present, they seem to be the shakiest industries when deflation happens, mainly because of the rising alternatives like e-wallets, which would eventually dominate the crumbling investments in the traditional banks. Down to our last route, commodity deflation. You know, inflation has been surrounding us for the longest time, but do you know what happens the other way around? Aunt Cathie predicts this commodity deflation from the supply of goods trying to be controlled now, but getting into the bigger picture. It would also drive down the commodity prices as they prepare for the market demand. The deflationary forces are about to set. I mean, it's already as clear as crystal. You may see see it right away in the employees getting slashed out from companies and getting a job offer from a cheaper place, and of course the soaring money supply in the economy. So don't be surprised if your dollar's buying power gets a boost when you look at buying stuff on your wish list, at least according to Cathie. For Cathie Wood, the existing state of inflation in the economy today is only caused by the monetary, fiscal stimulus, and supply imbalances in the market. And did you know that Aunt Cathie's not the only one who thinks this way? Well, even if inflation remains to be a hot topic for months now, Joseph Lavorna also confirms how higher inflation wouldn't occur as consumers are inactive in bidding up the prices of goods and services. The same goes for Mark Hafili, or the Chief Investment Officer at UBS Global Wealth Management, who recently said that there were no other signs of sustained upward price pressure in the market. Regardless of the economic crisis about to happen in the next 5-10 years, a plan for both might be a good idea. Perhaps diversification is the key to protecting your assets, or maybe even focusing your capital on assets that you think are least likely to get hit. And that's it for today, guys. Thank you for watching this video, and let us know what you think about Cathie Wood's predictions in the comments down below. Best comment gets pinned. Until next time, peace.